Hey there, it's Simplify the Realtor, and today I'm going to answer the question, what effect do rising interest rates have on Bay Area home prices? Watch this video and find out. But before I get into all that, would you do me a huge favor? Would you mash that subscribe button right there and subscribe to my YouTube channel so you'll get notified when I put up new, cool, fun, and interesting videos just like this one. And don't forget to click that little bell icon to make sure you actually get that notification. All right, well, let's get into it. Interest rates, mortgage interest rates are rising substantially, man. They are very high. And in fact, well, not very high. By historical standards, they're not high at all. But compared to what they have been, they've been very high. And, it was only a few weeks ago that I put out a video about my 2022 market, predictions or forecast or whatever. And, I use data from the California Association of Realtors because, hey, I'm not an economist, man. I don't get, my job is not to crunch these gigantic big numbers. I don't have an analytics team behind me, right? Well, I do. I have the California Association of Realtors analytics team behind me. I also got Compass behind me. They also have, quite a big analytics department. They put out some great charts and graphs as well. But in that prediction thing, they said that, they saw mortgage rates maybe hitting 5% by the end of the year. And guess what? We're just finished the first quarter of the year, and mortgage interest rates are already almost 5%. Actually, for many borrowers out there, depending on your credit score and your down payment and your loan amount, X, Y, and Z, blah, 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 you already are at 5%, or perhaps even 5.5%. I mean, it's really getting up there. And, but for most people, the average 30-year fixed, I saw this just last night or this morning, I think it is now 4.67%. So, everyone's going to wonder, hey, is this going to have a corrosive effect on Bay Area home prices? So I wanted to share a chart with you. And so this chart, basically, this came from Compass. The meat of this chart came from Compass. And it shows, U.S. mortgage interest rates from 1981 to basically the present day. One thing to keep in mind is that, interest rates are not local, right? So the mortgage market, it's the same interest rate in New Hampshire as it is in Texas, as it is in California. We all share those same interest rates. But one thing we don't all share is we don't all share the same rate of, home appreciation or depreciation. That is a very local phenomenon. So, Compass gave me the thing saying, here's the mortgage interest rates, and that was very helpful. But what they didn't do is they didn't show me any charts for the amount of home appreciation or depreciation in that time period. So I had to go and get that data all by myself. And I have done that before. I have dug up that data. And, the Federal Reserve of St. Louis, I'm not sure why it's St. Louis, but, there it is. They actually have a really wonderful website where you can go and download all kinds of economic data. And they actually have lots and lots of data for, oddly enough, the median home price in California. And it's in the chart, in the data that I downloaded. I just get an Excel spreadsheet, a CSV file I think I got, and it just downloaded hey, here's the median home price by quarter for the state of California since, I started in 1981. I think their data goes back to 1975 or something, but I started in 81 because that's where the Compass chart started. And the St. Louis Fed's data ended in October of 2021, which is not quite where the Compass chart ends. And so anyway, I took that data and I graphed it in Excel. Yeah, I used Microsoft Excel, and I created a graph in Excel. And I copied that number, that line, and I imposed it over the top of the Compass supplied chart, just to see what was going on with interest rates and home prices. So let's just take a look at that chart right now. All right, so you can see here that these sort of aqua-colored lines, these are the mortgage interest rates, and it starts out in 1981 with somewhere around 17%. And then it ends up in March of 2022 And here it says 4.67%, which actually is a number that I also saw. So this purple line right here, which you notice does not go to the end of the chart because it only ends at about October or so of last year. That's the last year that I got data for California median home price from the Federal Reserve. So when you look at it, like in 1981, it starts out at about $110,000. It doesn't say this. There's no axis labels, on the right side. If I was a truly professional chart maker, I would have done that. But so it starts out 110 grand or so in 81, and in October of 2021, it was somewhere around $880,000, I think, somewhere in that range. So you can see here how interest rates have gone, generally speaking, over the last 40 years down quite a bit. But however, there are a number of spikes that have occurred in that time period. So you can see that, for example, in 1984, there was a big spike. And what happened to home prices in 1984? Did they go down? No, they continued to rise gradually. And in fact, from 87 to 88 to 89, we also see that mortgage interest rates were increasing at the same time that home prices were increasing as well. Like in 1990, that we have a bit of a plateau. Even though mortgage rates were decreasing, we had a sort of basically a plateau in home prices. And then you'll see, like in the early 90s, there is a decrease in California home prices. In the early 1990s, it was kind of like a bit of economic slowdown there. I guess it was the closure of the aerospace industry and all this. I don't really remember what happened in the early 90s. That was like 30 years ago. But it was something like that. There was a general economic malaise in California. And so you'll see that, in the early 90s, there was an interest rate increase in 94, and prices did, in fact, go down until about 97. And 97, they did start to rise again as interest rates were going down, except that in 1999 and 2000, we see that there is a significant spike in mortgage interest rates, but yet at the same time, home prices were rising, sharply. And then, of course, we can see, let's not forget 2005 and 6, right? Interest rates rose in 2005 and 6, and we had a gigantic boom in the median price, right? Gigantic boom in the median price. And of course, that was the mortgage crisis, right? And that was driven by all fake money, right? But it just goes to show you that there really is no strong correlation between interest rates and median home price. But then, of course, we have, the crash comes, right? So, it wasn't in 2007 or so, the prices started going down quite a bit. And then you'll see they bottomed out in 2012 and 2013. What do we see? Oh, we see the mortgage rates increasing in 2013 and 2014, while we actually see the home price increasing substantially in those years. Also in 2018, you can see there is another gigantic, not gigantic, significant increase in the mortgage rate. At the same time, the California median home price just keeps on going up. So I hope this has been kind of interesting to you. It was interesting to me. I've actually seen this chart before, but I haven't updated it in several years. I'm not sure what blog post I would have put that on, but I've done this exercise before, so I know that mortgage interest rates are not tied to median home prices whatsoever. So for those of you out there who are thinking that, okay, well, now we're going to see a decrease in home prices, maybe we will, but it's probably not going to be because of the mortgage interest rate. In fact, like just today or yesterday or whatever, I was scrolling through the Wall Street Journal and looking at all the scary headlines, and I think that these scary headlines, these might have something to do with what's going to happen to home prices. It could be any number of factors, like, the California snowpack is just teeny tiny, and drought, and war in Ukraine, and there's all kinds, gas prices. There's just no end of things that could affect the median home price. But one thing I also saw today was that, um, new jobs were created, like 431,000 new jobs were created last month. The unemployment rate is at 3.6%. It's like, it's the lowest point it's reached in 50 years or whatever, right? I mean, like, that's the kind of stuff which actually probably really undergirds the whole entire housing price situation that we have here in the Bay Area. Is the employment sector is just so darn strong that, I hate to say it, but there's a lot of people making a lot of money, and they are able to pay these really exorbitant prices for homes, irrespective of what the mortgage interest rate is. And sure, if the mortgage interest rate were to jump up to 10%, yeah, that would probably have a very bad effect on home prices. But that wouldn't happen in a vacuum. That would probably only happen if there was some other external circumstance out there that necessitated or resulted in a jump of that kind. So, any massive shock to the system, who knows what kind of effect that would have. But these gradually rising mortgage interest rates in and of themselves are not enough, I don't think, at least not judging by what we see historically, to cause median home price decrease. Hey, I want to thank you so much for tuning in, and would you do me a favor? Would you look over there, right there? I got a whole bunch of other great videos on my site. This is my most popular videos. I want to thank you so much, and please stay tuned.